It is the day after the FOMC kept rates unchanged. The Bank of England also kept rates unchanged overnight, and that has the pound versus US dollar moving marginally to the upside against the euro. The dollar is a little changed, but against the dollar versus yen, the dollar is stronger. So a little bit of a mixed picture to start off the day. It is a holiday in the U.S., Juneteenth. As a result, the stock and bond markets will be closed, as will the federal offices, which means there are no economic data scheduled for release today. So it should be a quiet one, but I'll go through the technicals that are driving these currency pairs a day after the Federal Reserve kept rates unchanged. So let's get started. We'll start by taking a look at the euro versus US dollar on the hourly chart. In trading yesterday, the price tried to stay below the 200-hour moving average, just green line in the chart, then moved above it through and waited for the FOMC rate decision. The little dips down here tried to hold support against 200 and did a pretty good job going into the FOMC rate decision. While Fed's Chair Powell was speaking, we did see the price maintain its most of the time above that moving average, but then toward the end of it, we started to break to the downside and closed below that moving average level. In the Asian session today, there was a little bit of a pop up toward that level, but sellers leaned against the level and pushed the price further to the downside. We have since seen a rotation back higher, but that 200-hour moving average is going to remain a key barometer in trading here today. It was support yesterday and then became resistance today, so it will be resistance, maintain resistance at 1.14969, just below the 115 level. If we are able to move above that level, then the 100-hour moving average, which is moving to the downside and making it an easier target on further momentum, would be the next target at 1.15229. Until then, the bias is tilted a little bit more to the downside, with the hopes that the 38.2% retracement of the move to the upside from the May low to the May high would be targeted by the sellers. That level comes in at 1.14164, and then traders have a decision at that level. Do we go below it and continue this corrective pressure, or do we bounce off it and maintain the bearish bias with the price in between the moving averages on the top side and the 38.2% retracement on the downside? Let's take a look at the dollar versus yen next, and we'll also focus on the hourly chart. What we saw in trading yesterday was that after the rate decision, we did see a spike up below the 100 and 200-hour moving averages. You can see it barely there, but the price did quickly rebound above those moving averages and then closed near the, a little bit above the midpoint of the range for the day. In the Asian session, we did see an initial move to the downside here, but then we started to rotate back to the upside. And we're seeing increased momentum trading at the highest level going back to this day, which is May 29th, so the highest price for the month of June being established in trading currently at the moment. That took the price back above the high prices that we saw last week and earlier this week near the 145.47 level. Also took the price back above the 50% retracement on the move down from the May high to the May low. That 50% retracement comes in at 145.375. So this area right here is now going to be support as long as the price of the dollar versus yen can stay above that level. The bias remains more to the upside, and we'll look toward this swing area toward the 61.8% retracement. The swing area is defined by different swing lows and swing highs going back in time and back time further here between 145.92 and 146.24. The 61.8% retracement of that move to the downside is also within that level at 146.14. So that's a key target on the upside, as long as the 145.37 level, the 50% midpoint, holds support. So understand that for the buyers. If you're a seller, you don't want to see the price move above that level, and you want to see the price move back below the 50% retracement. It's that simple. Let's take a look at the pound versus US dollar. I'll take a look at the 4-hour chart here. And if we go back in time and take a look at this move to the upside, we're well short of the 38.2% retracement, but the low prices that we saw in trading here today did come down toward this swing area down here and found willing buyers. We've since moved back above the low price from a few weeks ago down here at 1.34137, and are trying to break above the 200 bar moving average on the 4-hour chart at 134.37. We are currently trading at 134.36, so right at that 200 bar moving average on the rebound and trading at the highs for the day, by the way, after the Bank of England kept rates unchanged with 3 members still voting for a cut, but 6 saying no go. But nevertheless, pound versus U.S. dollar is still higher. The other key level is this swing level right through here at the 134.13 level. That level corresponds with this low price going back here and near the low price from earlier this week as well. Came down to that level and found support buyers against it. So a couple of reasons why that was a floor. We broke below that floor trading yesterday and moved back above it and trading here today. So if you want to, if you see the pound moving to the upside, the best case scenario is get above the 37 level. But if you want to give it a little time, a little space, you don't want to see the price moving back below the 137 level. Conversely, if you're a seller, you want to see the price move below that 200 bar moving average and also below the 13 level on the downside. So there you have it. A look at the 3 major currency pairs to kickstart your trading day this Juneteenth. I hope you have a good day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.